What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay guys, Jay Martin here, CEO of Cambridge House, and we are looking for our next investment opportunity. I'm sitting down with Peter Spina, founder of goldseek.com, silverseek.com. Peter, how you doing?
Great, Jay. Nice to see you.
It's good to see you. Yeah, if not in person. I was just catching up before we hit record. It's been too long. Since you moved to Prague, we only catch up like once a year now. I miss it, but it's good to see you, man. And I'm glad you can make the time to come and share some perspectives with our audience. What I do on this show, Peter, is essentially prove or disprove an investment thesis. If I'm excited about something, my next step is to start shortlisting CEOs of companies in that sector that I think have the most promise. But then also hold that idea up to conversations like we're going to have, where you could say, yes, you're correct to be bullish on the silver market, but in fact, you're a year late or 5 years early, and here's why, right? And we just try to make sure the macro trend does support the small cap investment thesis. And that's what I wanted to talk to you about today. My edge in this sector is the conversations I get to have. And I look for consensus among all the personalities I talk to, whether it's, big picture macro or this technology investors or resource, and try to find like themes. Right now, it's indisputably commodities across the board. Everybody I'm talking to, for somewhat different reasons and different approaches into how they're playing that game, but commodities is like the core message where I'm seeing capital flow right now. So it makes me super bullish, right? And that's why I wanted to talk to you, because you're very active on Twitter and have been very active on Twitter with some price forecasts for the gold, silver market specifically, calling out, once in a lifetime opportunity to enter this market now. So starting right from the top, I guess, let's do that. Macro themes, Peter, what's driving you to become so vocal right now?
Well, we're seeing the response to the COVID situation. In the monetary sense, we're seeing a historic amount of money being created, and debt being created, and stimulus being created, and central bank response. So I was already bullish gold and silver for the last few years. I went full in a couple of years ago on the other thing that was kind of taking place. The economy was really rolling over. The Fed was stopping their quantitative tightening. They were not raising rates, it stalled. And all of a sudden we knew that they're going to have to do quantitative easing again and drop rates. But now COVID hits, and that just magnifies it, amplifies everything, and accelerated everything. So, gold is, reflecting that now, the gold prices. But on the macro sense here, we've got central banks around the world trying to deal with this massive collapse in economic activity by, producing stimulus. They're trying to get governments to do fiscal response. They're trying to prop up the markets. They're trying to, inflate the different bubbles that they've been pushing in the past, and they're doing a good job. We see it. We see the stock market record highs. We see here in Colorado, the real estate market. I've never seen a market like this ever. I mean, there's no supply. Prices are surging 20, 30, 40% out here in the suburbs within months. There's different things happening as a response to all the central bank intervention, and that's really comes down to the value, what they're doing to the value of money.
Right. Yeah, because it's just stimulus based, or how do you draw that conclusion, or I guess how do you rationalize that? Right, when we've got global unrest all over the world, most of the world's major cities are in complete lockdown. The equity markets are hitting all-time highs. Real estate in Colorado hitting all-time highs. Same thing where I live, west coast of Canada. It's not just the equity markets; it's asset prices all over the place.
Yeah, it's reflecting all the easy money, all the liquidity in the system, and that's what they're trying to do, is try to drive the money into the system through the different ways they know how to. And central banks have been, Japan, they've been buying up the stocks directly. The Bank of Japan is the largest shareholder now. They're talking about doing that here, but right now, they dropped the rates. They pushed mortgage-backed securities. They're buying that up. They're buying treasuries. They're manipulating. They're going to different means, and they're encouraging the central banks to say, "Hey, you guys need to spend more at the government level because we can't fix it alone." And that's a big statement, because they're saying there's such a problem right now in the economy. We have deflationary pressures from all the debt. If that's going to really start to unravel, we can't stop that. So you guys need to really start spending heavily on the government level, and produce big deficits, and we'll finance that. We'll print money and finance that. and they're just trying to keep this massive bubble they've created over the last decades alive, and they just never it never gets reconciled. In the last 10 years, we had this growth period. The debt to GDP levels in the United States, they stayed around 100%. They never took them down. At least in Germany, it was one of the countries that did that. They went from 85% to under 60%. So they paid down their debt. But the rest of the world, it was steady or growing. And then the last several months, we went to 145%, and it's growing. And the debt and deficits, they just keep exploding. So the whole situation is out of control. You have these lockdowns. The longer this goes, the greater impact it has on the economy, the less liquidity and economic activity. And it may just all blow up in their face here later in the year. For the moment, the liquidity is really good, and they've got everything pushing forward with stimulus and all this. But
so I want to touch on something you said there when you say, yeah, it could all blow up in their face later this year. I mean, there's a couple things there, right? Like we've seen inflated asset prices all over the place, except in commodities, right? And so I understand that idea. So a couple questions I want to bolt on there. First of all, what could cause it to blow up in their face? What could cause this strategy to blow up? Would that be some kind of like insolvency crisis? Or what would you?
Yeah, there's all sorts of debt issues. They're blowing up these bubbles to the point where housing becomes unaffordable. The liquidity in the system just is moving around, shifting around, and creating these big misallocations of capital. But I think there's going to be another round. We've had a lot of loss of jobs in businesses and small businesses, and those impacts haven't been really felt yet. And as I talked about the Colorado real estate market, that could flip very quickly as well, because you have tons of foreclosures stacking up, and that round coming, that's coming up. So how are they going to deal with that? Are they going to try to mop up some liquidity because they see maybe these bubbles are getting out of hand, or are they going to keep pushing it higher? I know that if this stock market starts to crash because they see the valuations are extreme, and they start pulling money out of there and looking for other places to put it, well, the Fed's going to come in and try to support the markets, and there'll be more liquidity coming up. But there will be a period like we saw this last year in March, April, May, when things were crashing. First you have the initial response, and then the Fed comes in with their bazookas and throws massive liquidity. So we might get a smaller version of that in the fall as some of these other problems start showing up, and they're going to have to do things about that. So I'm a bit concerned, that we're living through this dreamland right now where everything seems amazing. We've forgotten, almost as if COVID had no impact. It did nothing, but it has created a lot of issues, and those problems will be coming up more and more as we go throughout the year.
Okay, so if we see a crash like that, we could expect, and another liquidity crisis, we could expect everything to fall, right? Our commodity equities, our miners, et cetera. How are you then positioned, Peter, in that just in case scenario?
Well, I'm almost all into the gold and silver sector. I see an incredible value proposition in the mining side. The miners, they're producing massive profit margins. So even if the market has a liquidity problem and the prices of the stocks temporarily fall down, I'm not too worried, because the companies are cashing up, their balance sheets are improving dramatically, and they're producing strong cash flow. Their dividends are going to be great. They're going to be producing strong yields, which will be very competitive, and they'll come back. So I think it's easy to be in the mining stocks if there is a correction, because they're in a really good position now. Juniors may get more of an impact, so if that happens, it might be an opportunity to switch from some miners into that. And then I also, I've gotten very afraid of holding too much cash. I mean, I have some dollars and stuff to buy different opportunities in the short term, but anything 6, 12 plus months out at this point. This last year, I just said enough is enough. I'm going into physical metals as my means of holding money. I'm not going to keep it in the bank. I'm not going to keep it in the brokerage account, too much of it. I just don't trust the value of the currencies in general. And I think the value in gold and silver they're just screaming as from a risk reward perspective as excellent low risk opportunities. Interesting.
Okay. So you're loaded up on gold and silver equities. But you've transitioned your liquidity from cash to metal. Interesting. Okay, because I was wondering how you were planning on capitalizing on that potential waterfall event if it occurs, if you're light on cash. But okay, I'm with you.
I will raise more cash in this next couple quarters, which my expectation at the moment is we're going to go through another quarter or two of this bubbling in the equity markets and the gold and silver sector. They had this 4 or 5 month correction, and now they're getting energized and ready to make their next move. And I think we're really going to see the equities go way up. I think the mining stocks have a lot of upside to it, and in this kind of equity market, they can do very well. They haven't had that big move, so I expect that to happen in the coming months. So that will I would like to use that as a way to start taking some money off the table, because I've been fully in here now for 3 Navy years. That would give me some liquidity off of that. But even then, I plan to peel off profits from the mining stocks into precious metals, which I still think are going to be less risky, because at some point, the value of all these currencies are going to reflect all this debt that's being issued, and they're going to devalue it, and it could happen overnight. So you got to plan ahead.
Right. So when you say you're peeling off profits from the mining stocks and repositioning into precious metals, you mean when you're taking profits from your equity positions, you're buying physical metal, gold, silver with it.
Yeah.
That's what you're
more. I would like to buy more silver, but it's hard to get physical supplies. It's a very tight market. Gold's a little bit easier. So
talk to me about how you buy physical then. Obviously you probably prefer to have the physical metal in your possession somewhere. Is that exclusively how you buy, or how do you invest?
I use all sorts of methods. I don't really trust like the GLD ETF because there's some questions there, but there are other gold ETFs that are more trustworthy. Sprott has a great one. Now, on the physical side, number one, have physical in your possession. Obviously, counterparty risk is a lot lower. You could get, you got to be careful how you store it. So I have many locations and geographic locations. I do that, and I also use private vaulting. And also other services like Gold Money. There's AppMix. These different companies offer these different ways to also hold it in Switzerland and London and Singapore, different vaults very inexpensively. So I also like to do that, and that makes it a lot easier than to get liquid if opposed to going to a dealer. But most of the physical metal I have I use as a tool to save, to preserve capital, to preserve wealth. So I have a long-term perspective with holding physical metals. At some point, if there's going to be a real true bubble coming in to gold and silver, that will maybe entice me. But for the long term, I don't really see any other good alternatives to where to store your money to preserve your wealth. And so I really like precious metals. After this run up this year, I still think they're a very low risk, high reward potential. And then really it comes down to, do you trust holding fiat currencies? Do you trust in the value of the dollar, the euro, and all that to maintain and preserve your value? And history tells us that you can't.
Sure. But if you're looking at currencies like that, is there, what does Doug Casey say? The cleanest shirt in the dirty hand, the cleanest shirt on the hamper. But you know what I'm getting at here. Yeah. Do you trend towards USD? If you're looking at euros and et cetera, where do you go?
Yeah, I shift. The dollar right now is not as appealing. It's kind of a funny situation because the euro, it's not an exciting currency for me. I don't really trust in it. But right now, they're unable to produce enough. They can't debase their currency fast enough because there's a political division within Europe. There are different, it's not as cohesive as a system. So that for them to do what we're doing in the United States or in Japan or in Canada, it takes longer. And they're having problems. You have the German mentality, the more conservative mentality, and then versus the Southern European or these, countries that are really in debt and would like to print a lot more. So Europe's having a problem right now in debasing their currency, and it may take a year or two. So the euro may be relatively more valuable than the dollar, or more, stronger here currency. So the dollar has fallen quite a bit. It's probably got another 5% downside on it here relative to these other currencies. So at some point soon, I think the dollar gets a little more interesting. But if the commodity markets are really going to get going, the Canadian dollar might be a good place to be for the next short term. But I wouldn't want to hold it more for long term, because obviously there's a massive amount of debt and it's going to get devalued and represented in the value of the currency. So the dollar is not, a lot of people in the gold sector expect the dollar just to disappear overnight. We're just gonna, the dollar is just gonna lose all its value. But where are you gonna go? To the euro, and a lot of people do use as an alternative. The yuan, the Chinese currency, it doesn't have that trust, and it's not there established yet. It's going to take some time, and also, there's nowhere really to go, and that's why gold is a huge benefactor of all this. Because in the end, this comes down to trust. Can you trust the currencies to preserve your value, and do you trust the bank where you keep these fiat currencies? Why and why would you put your money in the bank when they give you 0%? And you're lending the money to the bank, which now no longer has to hold any of your capital as reserves. These banks were given 0% reserve requirements back in this latest crisis. So, the whole system is just absolutely insane. It's the leverage, the gambling mentality, the values, and no one really cares about fundamentals, but when they do matter, they really do matter. And you want to be in safe assets, and people will recognize that gold and silver are one of the commodities are great ways to protect yourself. And they're cheap right now.
Okay. So that's clear to me. So thank you for sharing that. So what you're doing right now, you're heavily positioned in gold, silver, equities, but beginning to take profits, expecting another quarter or two of appreciating share prices. You'll be taking cash out though, repositioning that into your gold and silver physical holdings to store that wealth. I like learning about how, people like you, Peter, when you have the gains, how do you reposition that wealth? Not just throwing it right back into the spec market, but where do you store it, right? Whether it's dividend paying stocks, real estate, hard assets, et cetera.
Yeah. Outside of that, the only other diversity I have in the asset portfolio is property in an undervalued market in Prague. So we, I think the real estate market has more upside, but there will be another big correction coming. And I think that there'll be an opportunity coming up to swap some of that gold and silver for those things. But the relative value between precious metals and a lot of other assets are just so out of whack that there's not any incentive right now to take that risk. And I'd like to I'd like to be invested in the general equity markets, but the valuations, they're not exciting. The growth in profits and revenue are not there. The mining sector, the average gold miner is making over $900 an ounce right now. Those are incredible profit margins. And
they are absolutely
dividend paying gold stocks. So that's going to be a big thing coming up.
Yes. And healthier balance sheets, more responsible management. We've probably seen in a decade, like cross sector, and that'll change if things keep heating up and money becomes easier, et cetera. Okay, so let's wrap up with some names. I'd love you to share some of your top picks, companies or CEOs with our audience. Who should we be looking at?
Well, the silver miners are in an excellent position as well, because there's not that many of them. So that when the investment capital flows into the sector, they're going to overshoot their valuations to the upside. So I'm more heavily positioned in silver miners. I've been switching a little bit more into First Majestic the last months. They've lagged behind, and I've been mostly out of that the last year. But now that's becoming more interesting as they get their balance sheet strengthened up and other issues get resolved. Fortuna has been my top position this year. I've been very heavy overweight that company, and my initial price target of $10 is nearing. So I'm actually in the process of peeling off of that. I'll make it a top holding, but for me now, Equinox Gold is becoming a big recipient. That's a high growth gold miner. They're going to be producing over 1 million ounces and trading at $2.5 billion market cap in a rising gold silver sector. That's more of a boring kind of double, triple I expect to happen. So I'm trying to reassess some risk, but I think any of the silver miners, there's a lot of leverage. All the traditional Mexican miners, Endeavor, Silver, Gold Resource Corp was an interesting one recently that has lagged very heavily behind and starting to look quite interesting. But they did a spin out last week of their Nevada gold company called Fortitude Gold, and that'll start trading here pretty soon. So I'm pretty excited about that. I love new companies. I love new clean share structures and new companies that are coming around. So I'm looking for those opportunities. When the silver price breaks 30 and goes to 35 and then hits 50 and hits all-time highs, anything silver with it is going to go through the roof. Silver juniors, there's been some fantastic returns, and I think it's going to continue on as they were just left for dead over the last 5-10 years. So Abra Plata, they have a lot of leverage to silver and gold. Defiant Silver, that one has just been roaring. I've been bullish on that one for several years. That's been a nice asset, so that's finally getting recognized. And then Arcana Silver, that's one I've been accumulating in the last several months, and that's maybe it's been running right now. So I'm pullbacks, and there's Kootenai Silver. That one that was my top position and remains so in the exploration side with Abra Plata. So a lot of these companies that I've watched for the last several years, people they left them for dead, and now they're starting to get revived, and cash is coming in, and the exploration side is just blowing up, and there's a lot of capital going into it. So there's a lot of exciting news and potential for discoveries and resource development coming up. So I'm watching that. So I'm looking for other opportunities, and I'll be watching the interviews that you're going to be doing with the mining companies. I use Vancouver as always my readjustment point for every year to rebalance the portfolios and look for new opportunities. And I have found a lot of great opportunities at the Cambridge House show. So I'm looking forward to finding some new ones for this year. So maybe you can help me out with a couple good picks as well. Yeah,
well, I'd absolutely love to. Okay, look, Peter, it's been awesome. Thanks for sharing an awesome list of companies that you're looking at that my audience can action and take a closer look at. Right down to Kootenai, the Explorers. That's where I like to go. Super spec if we can. For anybody who wants to stay up to date with Peter Spina, you can follow him on Twitter at Goldseek, or check out goldseek.com. Anywhere else we should point people, Peter, to find your content?
Sure, on Silverseek as well. And I'm also contributing to the goldseeker.com. It's a premium newsletter service that Chris Marquise, who does a lot of analysis. He's been busy developing that. Lots of great work on that side he's been doing. And on Twitter. And just also know that I do have that Czech sense of humor, which can be kind of brutal at times. So
I love it.
just understand that. So sometimes I let some comments go there that are more normal in Czech, but maybe not.
Great. Look, I appreciate it. It's been great catching up with you.
Likewise, Jay, and hope to see you next year in Vancouver.
Definitely.